nationally.
I remember.
That helps support the development of women in the commercial real estate industry. So today we are lucky enough to have two of our own here. We have Momei Q, who's a Goldie Initiative board member, moderating, and Katie Dunn, a Goldie alumna, here participating in our fireside chat, focusing on the topic of when women invest. Both of them come from the investment side of things. Momei works primarily in tech, and Katie, after 25 years in real estate financing, moved into angel investing, both as an investor and a coach to startups.
Yeah.
And so I'm gonna kick it to them with an icebreaker question. And so my question to you is, I imagine the industries that you're currently, or the industry that you're both currently in, is not the one that you expected to be in when you were 8 years old, 10 years old. So when you were 8 or 10 years old, what did you think you'd be doing?
I always wanted to be in real estate, actually. My dad was in real estate. He did everything from property management to development to leasing, worked for a REIT. He worked in corporate real estate at the end of his career. So that was really modeled for me. And I started working at his company when I was 12. My mom was in residential real estate. So the fact that I left real estate 2 years ago is kind of wild. It's just it's weird. It's weird.
Yeah, I definitely didn't think I was going to be in venture or real estate. Both my parents were from the Beijing Film Academy. So I grew up in China, and both my parents were part of the Beijing Film Academy. And my mom was a sound recorder, and my dad was in cinematography. So I always thought maybe I was going to be in film, and I still love film, and it's part of me still love the arts and sort of not the science part. But instead, my career path took me to being an engineer, and then now in venture capital.
It's crazy.
So I guess we can kick off and dive right in. Right, so I think we have a group of great women who are here today and wants to learn about your background and investing. So maybe we'll start there. Sort of what got you onto the investment journey and investment path, and maybe talk about your career today.
Sure. So like I said, it started out in real estate. My dad, I really credit him a lot with teaching me financial literacy, which is not something that a lot of women have, and it's made me really passionate about it. So I was always investing. I invested in stocks. I invested in real estate. I even produced a movie at one point. So, but I really fell in love with startups, and it was sort of when Uber went public. You got well, it's not so young, right? But people remember when Uber went public, right? I was like, how do people get into that deal and then make all this money? Like, how does that happen? And so and that was a long time ago. That was much earlier than when I started investing, but it piqued my interest. How do I get in and find these early stage companies? And with my background in real estate, I was doing lending. So I would have to underwrite all of these tenants, whether it's an industrial building or an office building or a retailer. So I got to know the business models of so many different businesses, because I would have to look at them and make sure they could pay the rent. And then I would make the loan to the building if I knew they were going to be able to pay. So I really loved that part of it. I loved learning. I loved going, like, especially industrial buildings. So cool. Like, I toured Amazon fulfillment centers, which is so cool. And just these really interesting, I saw caves in Kansas City, like really interesting things. And that when I got introduced to one deal through my friend at work. His brother-in-law was starting a company and said, I want to invest in this company. How do I get permission to do it? And I said, I'll tell you, but you got to tell me what the company is. And so I ended up investing too. And then from that, there was another deal, there was another deal, there was another deal. And I really made an effort to get into learning about angel investing. I took an angel investing class. I joined Chief, the Executive Women's Network, to give myself other resources and other tools to learn. I did Yale Women on Boards executive education program, all these things to kind of figure out, is real estate the right path for me, or should I try something else? And then it just kept pulling me, the entrepreneurship world kept pulling me.
Yeah, and you build a career that so many people, I'm sure, really envy. You get to have fun, you find success, and I'm sure a common question that certainly I always hear when I talk to young women is, how do I get started? Like, I want to invest, but I don't know where to start. And we've heard that question both on the public stock side as well as on the angel investment side. But maybe we'll start with angel investing, right? And as someone who maybe wants to get into angel investing themselves, what would be some advice that you would give them?
I would say, okay, there's a couple things. So to do deals directly, you have to be an accredited investor. And accredited investor means you have a certain net worth or you earn a certain amount of money. And it depends on if you're single or a couple, what those things are. So that's number one. Don't do it if you're not an accredited investor. It is so risky. Yeah, I mean, there's deals I'm losing everything on. Like I have 19 investments. There are 2 for sure that are dead right now. So I lost all my money there. It's so far, you know? But there's some that are doing great. There's some that are doing awesome. And that's why you do it. You diversify, right? You figure out, like, you hope that I think they kind of say 20 is the magic number. And then you hope that, you know, a couple are going to fail. You hope a couple do okay. And a couple are awesome. And then, so that's the first thing, is knowing what your financial situation is, how much you can allocate to this. The second is there's other avenues if you aren't accredited, like WeFunder or Start Engine or Republic. That those are called crowdfunding platforms. And those you can go on and invest as little as $500 or a small amount of money in a company. You have to do your own research. You have to look at it. I would say stick to what you know. Don't do something because you think you're like, oh, wow, AI, it has the word AI in it. There's so many AI deals out there. Don't just go into AI because it's out there. And you see one. It's about, what do you know? What do you like? What are you thinking of? What the future of this is. Also, it depends on the founder. It's so much about who they are, what their experience is, how gritty are they, how passionate are they, how transparent are they? So there's a lot of different factors, but if you're interested, take a class, join an angel investment group. In fact, I went to a great group last night. I went to their meeting here in Chicago. It's called the Josephine Collective. It was started by 2 women. One is a 2-time exited founder. She's fantastic. Her name's Desiree Vargas Wrigley. And then the other woman is Amy Rosenau. She's a financial planner. But Josephine Collective, you can just learn. And their whole model is you pay $250 a year to get their deal flow. And then they ask you to invest $3,000 a year. So you can do a minimum of $1,000 per deal, and they give you the deal flow. So a lot of people think, oh, I have to write $50,000 checks, $100,000 checks. You don't. That is a total misnomer. If you're interested in this, you can write a check as small as $500 if you do it in WeFunder, or $1,000 if you do it with the Josephine Collective. So just get out there and try it, see what you can do. There's so many things out there that women are more likely to donate to a cause than they are to invest in a business that are solving the same problem. They view it as less risky to give their money away, never see it again, never see it again, than they will if they could actually get a return on that. How great would it be if you solved the problem and you got money back? Win-win, right? So don't be afraid to do it.
It's fascinating, right? And I think there's research all over the place on this, on how women just have a really hard time diving into investing, even though investing has been shown many times as like the one vehicle that can propel you to a different class, right? Like immediately, and through the vehicle of investment, that's how you create wealth. That's how you change your life. But it's a mental hurdle sometimes for women to take that step. And I completely agree with that stat that you just, I'm not surprised at all that women would donate, right, before they would actually invest. On the research piece that you said, what would be, I guess, 2 questions. One is, what advice would you have in terms of researching on private companies that might not have all the publicly available information? And then the second piece is, I mean, I certainly see that in my day-to-day venture world too. I wasn't kidding when you say you have 19 companies and 2 though, that's awesome. Most of the time it's the other way around. 19 comes to you to succeed. So when someone first invests, do you think they should pretty quickly start to build a portfolio too? Because of that loss ratio, or how do you think about that?
That's a great question. It's very tempting when you get into it to every deal you see to write a check, because these founders too they're very passionate and they need the money and they want the money. So you're like, oh, okay, well, it's just a little bit of, you can't do that. You've got to have guardrails. So I have a very strict thesis, which I created very early in my career, or my angel investing career, which is I invest in underrepresented founders. So for me, that's women, people of color, LGBTQ, in consumer packaged goods and tech. I have, since I started, I have only said I'm only going to do deals in the US, because I have invested in 3 companies that are, one's in Canada, one's in Ireland, one's in the UK. It just gets more complicated, and then I just want to simplify it a little bit more. And I also like them to have a sustainability ethos to them. It doesn't need to be like a climate tech thing or solving all the world's problems, but I want them to have a mission statement that includes something about sustainability for the future. So that's the biggest thing, is coming up with, like, you guys, what's your thesis? What's the thesis for CSP?
There's a few different pockets. I mean, we
Yeah.
invest in the software layer. So we have so I think, building on what you said, right? You should be focusing on something, right? If you just say yes to everything that comes in, I think that could be really tricky. So for us, because sort of PSP and the Pritzker family have relationships across many areas of the economy, we know we're going to be pulled in different directions in terms of sectors. So we decided to focus on business model, right? We want to get to know all best in class business models, so that even if we have to sprint a little bit on the end market, we feel okay to do that. But then within pockets of software, there's certainly low hanging fruit that we think could be solved. Like, a lot of things are still paper-based, digitized, a lot of industries, certainly on the climate tech side too, we will be focusing on more the reporting portion, because everyone wants to track their energy footprint, but there's not a lot of great ways to do it. We think there's a lot that AI is disrupting in like back office work, like accounting, finance, things that could just be done much quicker and less mundane. But I think we're saying the same thing, which is, right, like, when you're researching, have a thesis so you can be smart about the opportunities that you're investing in, because the sure way of losing interest in investing is if you start losing money.
Yeah. And it's also nice to be helpful to the companies that you invest in. Like, there's some companies that I'm very close to the founders. I talk to them all the time. There's others I don't. And that's maybe because I invested through a syndicate, so I don't have a direct line to the founder. But I want to be able to help. I want to be able to open up my network and say, like, I want them to come to me and say, Katie, I need help I want to talk to this person. Can you connect me? Or we have one company that I invested in that's a presentation model. So you can make really easy video presentations. They're sort of video. They're a little bit different than normal video. Very simple slide presentations. And she was having trouble, even though she's a Fast Company, one of Fast Company's 2022 best companies, going to be the next Canva, all these things. She's having trouble getting product market fit. So she said, I think I should try CPG, or consumer packaged goods, and doing a little QR code on the product so that somebody can be in the store, look at it, and get some more information on the thing. I was like, that's great. I have a ton of contacts for you. She's finding product market fit. She's working with all of these other companies that I've invested in, other companies I've advised. And it's like, this is so great. It's so fun. Like, everybody's talking to each other and it's like humming along. So that kind of stuff is so rewarding.
Totally. And I guess in this environment, right, venture has had or angel investing too, had a kind of a tough time in the last 2 years. There's been a lot of overfunding of venture companies, and you have a lot of people that are getting scared of the category. Are you seeing that as part of the landscape? And how do you advise founders now? Like, do you advise them differently, kind of fundraising in this environment, or how do you think about that?
Yes. It is very, very, very tough to fundraise. It is very tough to fundraise. Women are having a particular hard time. Consumer packaged goods are having a particularly hard time. If you don't have revenue or traction, like there were kind of during the pandemic, things got wild, and people are like, I have an idea to make a chair. I'll give you billions of dollars to make the chair. It just nowadays you have to have the business model all set. You have to have revenue coming in, you have to have a lot of customers, you have to have a lot of email lists. It's so much more difficult. So I also advise founders on their fundraising strategy with my business partner who's based in Dallas. And, you know, we're telling people, when we started working together 2 years ago, okay, your fundraiser will probably take 3 to 6 months. Now we're saying, we don't know when you will close your round. So just be prepared. And we coach them to talk about how impactful the money is. And so to know where every single dollar they raise is going to go. And in that, even down to, okay, Momei, you're going to write me a $25,000 check. If you write that check to me tomorrow, I'm going to spend $10,000 on marketing. That's going to improve my revenue for next month to go to here. If I can put these dollars towards that thing. And that I think is really helpful for not only the investor to see that impact of what they can do, but also the founder being gritty with every single dollar they have.
Yeah, I think that's really good advice. I had a founder ask me this question once, which is, you know, I'm such a young company. How am I going to know the answer to these questions, right? And I think the point is not necessarily you have to be exact on your numbers, but you have to be thoughtful about it.
Yeah.
And same with them showing we're so precise about the financial models, even though we know that sometimes those numbers change a lot over time. But if you haven't even given them thought in terms of how many salespeople do I need to drive to this revenue, how much do I need to invest in product in order to launch the next thing, then you don't even stand a chance, right?
Yeah.
So
There's a prolific angel, you probably know who she is, Jenny Fielding. She's based in New York. I encourage you guys all to follow her on LinkedIn or Twitter. She posted last week that this is a controversial statement. Pre-seed companies need a financial model. And I'm like, yeah, they do.
Yeah.
I'm a finance person. Like, but people trolled her so hard. No, they don't. It's all guesses. They don't know. It's all, you know, they don't need it. They don't need it. I totally disagree. For me, it's about the assumptions they're making for the growth they're going to have. What it gives me insight. How are you thinking about this? What are you going to put there? What are you going to do there? It's the detail. It's the thoughtfulness, like you said.
Yeah. And a good founder should be able to show that, right?
Yeah.
And then that obviously at that stage, a founder can make or break a business. I'm curious to see how you assess founders. This is a big topic that comes up for a lot of early stage investing. It's about the team, it's about the founder, because businesses can change, but the good founders pivot and they find ways. I find it sometimes difficult to explain kind of the 5 key metrics that makes a successful founder, right? Because what happens is usually they're passionate, they're charismatic, and they can pitch for 45 minutes, right? Do you have a framework that you think about in terms of like evaluating the founders, or is it more case by case, look in their eyes and see if you believe in them?
It is a little bit of that. It is a little bit of gut. It is a little bit of intuition. Do I vibe with this person? Because it's a marriage. You're getting if you invest in somebody, you're getting in a long-term relationship. And because you're not expecting to get the money back for 5 to 7 years, probably 10, maybe longer, who knows? So it's developing the trust, it's developing the transparent conversation. The passion is huge. The grit, you know, how are you going to use the dollar? How are you going to get your hands on? How are you going to get in that room that you really want to be in? Like, how do you find your way there without somebody, you know, necessarily helping you? The other thing is coachability. That's a huge one. Just meaning, are you going to take feedback well? Are you going to look at what somebody's saying and be defensive? Or are you going to be say, oh, okay, yeah, that's actually a good idea. Let me take that back to my team and talk about it. And we see that's one of our, on the advising side, we will not work with a founder that we don't think is coachable. It's just not worth it. Any investor we introduce them to, any relationship, lawyer, whatever, we're going to get it's not going to show well for us. So our reputation is everything. And as an angel investor, as a VC, your reputation is everything in the community with regards to sharing deal flow or sharing founders, so you've got to protect that at all costs. And that's really the coachability is the biggest thing.
Totally. I don't know if you do. I sometimes get asked, hey, when you invest, do you use more intuition or do you use more logic? Sounds like maybe a little bit of both involved in it. How would you answer that question?
Yeah, I've used my intuition and didn't listen to it and gotten burnt. So, and then my financial sciencey math background, I can't not dig into the numbers. I can't not like understand every single thing about the business model, and my due diligence just comes out. So I think I have a very unique background in being able to balance both. But I will say, like, there's one in particular. I should have trusted my intuition, and I kick myself to this day because there's just so much BS going on. And it's one of the companies that's dying, and I really, it's very frustrating that I'm mad at myself for that one.
Yeah, yeah. I feel like sometimes I use my intuition for the first mile and the last mile. And
Oh,
then
that's it. I like that.
and the
Yeah.
logic in the middle,
Yeah.
right? It's like you meet someone for the first time, like, are they the type of profile and persona you want to lean in to do more work, right? And then you have all this data, right? You have your long list of pros and your cons, and then you have to make a decision, and there's so many reasons to say yes and so many, but then the last minute, like, do you lean in and what is your intuition
Yeah.
say to you? So I kind of like to do that. And I think it's the reason there's some logic in the middle too, is I found that I can listen to my own intuition, but my team might not listen to my intuition, right?
Yeah.
I can't go to my team and be like, just trust me, like, this
Yeah.
is gonna work. And they're like, no.
Yeah.
And so I have to build a case, right, with data and logic and things in the middle. And through that process, sometimes it, I wouldn't say it necessarily changes the strong intuition, but sometimes it gives you more data to like shape like your perspective and stuff like that.
Yeah. And there's also time, like getting to know a founder. I'm sure you see this too.
Yeah.
There's the longer you can take to get, and I'm not saying drag it out, but the longer you can take to get to know them, it's like dating, everything's all sunshine and roses at the beginning, right? And then you have a rainy day and you're sitting around, if that person bugs you or they're get snappy with you or something, you're like, oh, maybe this person isn't for me. So you have to see them in different situations and have it be time. You can't, especially when you're writing the larger check.
Yeah, yeah. So we've talked a lot about early stage investing. If a woman wants to be an investor generally, do you think they need to focus on a stage? If someone wants to say, hey, I made a few angel investments, but I'm also interested in like investing in the stock market. Like, can you do both at the same time?
100%. Diversify. That is the way to reduce risk and to make a lot more money. I'll tell you what we should all be talking about money. Everybody should be talking about money all the time. Women should be talking about money. So I own 2 pieces of real estate, a house and an apartment that I rent out. I have a real estate investment that I've made, which is not doing well, which drives me crazy. Because I really thought it would do well. I have 19 angel investments, that one is a debt investment, a crowd lending deal that I invested in. So it's similar to crowdfunding, which is, but it's a debt, so I get a monthly payment, which is great. And then I have a stock portfolio and a 401k that's mostly in stocks, individual stocks, ETF, which is exchange traded funds. By the way, nothing we're saying is investment advice. We should probably say that out loud. That I've recorded. This is not investment advice. But yes, diversification is great, and it's the way to build wealth. So you have to don't sink every single dime into angel investing. You will lose your shirt. You have to have other things out there.
Yeah, I totally agree. And a lot of times for the public stocks, right? Like now that we talk about the early stage companies, we don't really have anything except a founder and maybe an idea. You'd be surprised at the wealth of information you can find on these public companies. So back to what we were saying earlier, if you have a thesis, right, climate tech or around AI or something, and you believe in that sector, there's really a wide range of companies that you can invest in that might fit that and can build a nice portfolio for you.
Yeah, I mean, there's so Ellevest, if you guys haven't heard of that, Ellevest.
We're an investor.
Yeah, that's awesome. So Sally Krawcheck is amazing.
Yeah.
So she's the founder of that. She's a finance legend. And it's all about women investing. So that's a platform you can go on and put some money in and invest. There's a lot of, like, you can find, if you're more comfortable working with a woman, or working with somebody that looks like you, knows you, understands you, I would recommend that. Like I at one point it was a guy, but I was working with a financial planner who was like 10 years older than me. So he was kind of he had been through the steps of life 10 years ahead of me. So that was really, I found that really helpful. Like he was like, you got to start thinking about this and start thinking about that. And let's be a little bit more aggressive now because you're young still. Like those kind of, having those conversations and having a specialist that knows is everything. There's so much help out there, and you don't necessarily, it's not expensive to have your own financial planner. It's, you pay them a percentage of what you earn. So do it, because take advantage of their expertise. They do it day in and day out. You don't, but they're going to help you.
Have you seen anything that helps if I'm a woman that is a little afraid to take that first step in terms of investing? Have you seen anything that helped? I can think of a somewhat creative example, which is there's a group to get women together to play poker.
Yes.
Because poker, right? There's a lot of, bullets underneath poker that makes it interesting for investing, but it's like you're investing with limited information, like unknowns, you have to take a leap of faith, but it's also something that in some ways is even more scary to women. And you would just limp in, right, with like, just to see the cards. And this organization, what they make you do is like, they actually don't allow you to just play the minimum in order to see the cards. Like if you want to see the cards, you have to at least 3-bet, which is like you like triple the amount of money in there, and then you can go. So test your. It makes you want to take risks and makes you be more bold and daring. I don't know if you've seen something like that, where it's like for a woman that is maybe unsure of whether or not she wants to lean in. What would you say?
I love that. I mean, I know exactly what you're talking about. I think that is so awesome. I'd also say take a class. Like I love to learn. I'm a lifelong learner. There are angel investment classes, or go to an angel investment group meeting and just be an observer. And then, if you don't like to walk into a room, find a friend to go with you and just say, just please come with me. And then you'll talk to one person and say, have you invested? Like, just start the conversation. Like, have you invested? That person will be like, oh yeah, I've invested and this is what I did. And you just need one buddy to help you get going. I think Ellevest is a great platform for education and for being approachable. It's just, if you guys reach out to me if you're nervous or want some sort of contact or something, like I'm happy to talk about this. I think financial literacy is so critical. Women, we spend more on our shoes than we do in, like, I know people when I was younger, and I'm old now, but when I was younger, my friends were like, I'm not giving money to buy 401k because then I can't buy, Monolo Blahniks. I'm like, that is so wrong. Like, what are you doing? I mean, and the amount of money I spent in my early days on shoes and purses, I wish I put into angel investing, but I didn't know, I didn't have that opportunity at the time. And it's so much more accessible now. There's so much more information out there. There's so many more people out there doing it that you can really get going. But yeah, I mean, there's like, I bought Home Depot. I'll tell this stock story. I bought Home Depot because I worked for Merrill Lynch. We figured out we were at Merrill Lynch at the same time.
In New York, it's crazy.
And we would get some of my bonus came in stock, and it was Merrill Lynch stock. So I would, because I was all in on Merrill Lynch at the time, I would sell that stock right away and buy something else with it, so that to diversify my portfolio. And I bought Home Depot, and it is up 1,000%. I mean, like, that's awesome. Awesome. So, and I'm not saying that's going to happen in every time, but I don't even think about it. It's just there, and it pays me dividends because it's a dividend paying stock. And it's just that kind of, I'm so grateful to my younger self for doing that.
Yeah, I've definitely put a lot in shoes as well. Although inflation, those shoes are now, the cost is much higher. So there's pros and cons. I'm sure there's a lot of direction for things to go, but maybe I'll pause there. Actually, let's just see if there's any questions from the audience, and if not, we can always continue on other topics.
Are any of the classes that you took, do they kind of like hold your hand where it's over time and they're like, okay, today we're gonna do research on the company, and then like by the end you actually have some kind of like action? Because I feel like that would be really cool.
Yes. So the angel investment class I took is through a program called Switch. The website is Switch the Future. I can send it to Kelsey and then have her send it out. That when you, after you take the class, you are then a part of their angel group. And there's meetings at least once a month. And the founder of that is her name's Kate Brodock. She's so fantastic. I can't say enough good things about her. We're really good friends now from me taking that class. We've done it together. But she will, you, after taking that class, not only do you get walked through all of how the due diligence works, the financial model, what the investing vehicles are, if you're doing safe, if you're doing equity, the legalness behind it, all of that. It's also, do you want to walk through a deal? You can share deals within the group. She has experts come in on AI. She has experts in, that will, like lawyers that'll just come and give another briefing on what are they seeing in the market, like all that kind of stuff. So angel investment groups are great for that kind of stuff too. And you'll just get in the flow of it for sure.
Thank you. And another one I would suggest looking at is this group called Going BC. So one word, and John Gagnon, I think, is the main lead there. And he publishes a newsletter. So they also have investment jobs available, but like there's usually a blog post on things to invest. There's a formal class too, if you really want to lean in, but there's a lot of very basic VC concepts that even as an experienced VC, I sometimes think is pretty interesting to look at.
We have a couple questions from the chat
Awesome.
here. I'll start with, what are the panelists' thoughts on robo investment platforms?
I mean, I don't love it. This is because I'm a control freak and this is why I got out of corporate, is because I didn't want people telling me what to do anymore. And so I want to do with my money what I want to do with it. So I don't love it. But there's also there's some things that I'm invested in that just reinvest, like when the dividends get paid, the ETFs they get reinvested. So there's some of that, but I wouldn't consider that robo. How about you?
Yeah, I think robo is, so if you want to be an investor, right? Like I wouldn't say go to robo advisor because you're not really learning anything from it. But if you try to purely think of it from I'm too busy and I don't even want to think about investing, but I want to think about it in more of like an asset allocation. Like I'm going to set aside, $100 a month to invest, and I just wanted to run in the background. I think it's better than spending $100 on something that you never recoup anything from, right? So I would say that's the role in my head that robo advisor plays. But if you're actually wanting to be an investor, I think that's going to be minimal help.
Yeah. I have another one.
Yeah.
And then Neva, maybe you can go.
Go ahead.
Oh, here, okay. Someone asked, do you have any advice on finding a good financial planner? Local searches seem to be saturated with part-timers, and sometimes it's hard to find a trustworthy advisor. Tips.
I'd say ask your friends who they like. I don't know if that person's a man or a woman, if their women friends don't have one, which is common, unfortunately. Ask the dude friends, because they probably do. But yeah, ask your friends, because it is somebody that you want to trust. I'd say go with a reputable firm. Mine's Morgan Stanley. I've been with them for a really long time. It was Merrill when I had worked at Merrill, which is Bank of America now, but still Merrill has the name there. But don't skimp on something like that, and don't trust your gut. If you don't like the person or you don't trust the person, they're not right for you, and it's okay. You're not gonna hurt their feelings. Just move on to the next one. You've got to do what's right for you. So I definitely I think if you're looking to start out, don't you think Ellevest is great for that?
Yeah, and Ellevest has a lightweight, digital version, and it has a more involved private wealth version that you can have calls with a financial advisor. There's as much or as little involvement as you need, right? So Ellevest is a great one. I also agree with the referrals, right? If you have a friend that's used them and they're really happy about it, I think that's great. I think even better, right, is if you can have someone that not just coaches you on investing, but across life and other areas of financial planning. And I think I have this conversation all the time with friends, which is it's so amazing how little they teach us about personal finance in school.
Yep.
And it's such an important skill set. I am in finance, and it took me until pretty late in my adult life to just have any financial sense of things, because we were never taught that, right? And so do some learning on your own first, so you can be prepared to ask questions to the financial advisor that you eventually pick. But if you can pick someone that you trust everything from, right, like investing to, so many people don't even have wills,
Yeah,
right?
well,
Like,
yeah, that's really important.
things like this, your whole gamut of finance needs, I think that would be ideal.
Yeah. I was actually, I'll just say this and we'll go to the question, but I just on board or had a conversation with a founder that we're gonna help with his fundraising strategy that's developing an app around financial literacy. Because he told me, and I didn't know this stat, Gen Z are more likely to listen to influencers and their advice on how to deal with the financial
Yeah.
than their parents, than, any financial expert on TV, all of that. So, which is wild. But to me, because, who's not like a big social media person. So just be careful where you're getting your advice and that you really trust it. That's why I say like take a class, like learn for yourself, study for yourself, and don't, because it's not GameStop to the moon.
Good movie though.
Great movie. It's really good. Okay, go ahead.
I had a question for both of you, just kind of thinking through the interview process, or I love how you put it, like the dating process. Is there a key question that you have in your playbook that you ask, right, when you're looking to invest to help you with your intuition?
What do you do? You go first.
Okay, so I'm still like a very numbers driven person, because I think I'm probably invest a little bit later stage than
Yeah.
some of the areas that you invest in. So even when I talk to a founder that's in an earlier stage, back to this thoughtfulness and precision, right? I need to be able to hear articulation, like a very strong articulation on how you're going to make money and how first you're going to grow the market, but eventually, and stealing something from one of my partners at PSP, how do you just like spit out cash in the end, right? How does this business just like run and just spit out cash? It doesn't have to be tomorrow. It doesn't have to be in 5 years. It might be in 8 years, but like at the end of the day, that has to be believable. And we've seen in the last few years, right, like so many things that were funded that were valuable to the consumer, actually. But because the business model is not the run, your cash ran ahead, your cash needs ran ahead of your cash flows, and the business dies, right? So I am like hyper focused on that. And there's examples, right, in our industry in real estate when, not to name names, working spaces, disguised as, and the numbers don't work anymore. So even at the very early stages, I tend to probe for that.
So in that situation, are you more focused on the numbers and like the support for those numbers, or are you more focused on like strategy?
I think both, right? So first, let's just take if you have one founder, right? They would have to recognize that. And you'd be surprised at how many people don't, right? Like how many people just say, oh, we're just gonna be like Uber, we're like Amazon didn't make money for many, many years. So eventually we're just gonna own the market and something good will happen, right? Like I get a lot of those questions, those answers. And I'm like, no, you have to have a next step in terms of how do you turn all those users and market share into something. And then the second piece is no one can do it alone, right? So you have that. So then who are you gonna hire and how are you gonna build the team? So if you're a technical founder and you're innovating in real estate, I would want one of your co-founders or key executives to come from real estate. Or if you're a real estate person, sure, you understand the problem, but if you don't know how to build a product, right, I would want you to have a technical co-founder. And then it's intuition in terms of like, if I think this person can hire
Can
people like that.
execute.
Yeah.
Yeah. So my question is, what are you gonna do if you only raise half the money? That's something I ask of every founder, especially in this market. And if they are deer in the headlights and don't have an answer for that, or if they say, oh, then I just will fail, like you're not for me. I've had people say that, like, what I want to see is the founder say, I'm gonna make this happen at all costs. I will get a second job to fund it. I will do, I'll won't implement this tech piece because it's really expensive. I'll wait till I get more money to do that, or it might just take me a little bit longer to build what I want to build. So that's the thing that shows how they react to that is very telling.
So when things don't work out as expected,
Yeah,
like what are you gonna do?
exactly.
So you had mentioned crowdfunding as a way to kind of have an approachable way to like start investing. But I'm always curious, like, how do you get that seat at the table from that next level of like being that person that people go to for angel investing, or even like having like the opportunity presented to you? Because like that I feel like is very like a mystery to me in terms of like how do you get that seat at the table to be approached, even have the opportunity to invest, like before the IPOs and everything like
Yeah.
that.
Yeah, that was my exact thing. So the way I did it was so I had a couple presented to me because I knew people. And then I took the angel investing class, and so then I got more deals. I was part of the Chief Network, and there's an angel investing group there that shares deals. So I invested in a couple there. Through that, I met some other women that we share a thesis. And so I do a ton of stuff with them now, and we share deals. And like, it's sort of, you've got to build the network to you get in with one, then you'll meet others, then you'll go to theirs, and that it's sort of that kind of thing. If you're interested, you should, I'm obsessed with Josephine Collective. I can't invest with them because I live in New York and it's like stupid blue sky laws. We don't need to get into it. But I love their model. I highly recommend you. So many nice people I met yesterday. It was really cool. So the Desiree Vargas Wrigley runs part of 1871, the P33 tech something part of, you guys probably know. I'm butchering it, but anyway. So yeah, you should check it out. We had one back there, and then we'll come to you.
But changing lanes a bit, but you mentioned earlier how important it is that women are forthcoming about their investments and what they're investing in, and working with each other to be literate. But sometimes those conversations are difficult to navigate, both in your group of friends, but also professionally, women you work with. So I'm curious about how you navigated those conversations.
That's a really good question. And I will just, be totally honest, because that's the only way I am. A lot of my friends from growing up and good friends from high school and college don't work or didn't work. They worked and then became mothers and work in the home, or I shouldn't say didn't work in a professional setting. And I didn't do that. I've always worked in a professional setting. So I found other friends that did talk about that kind of stuff. And some of them I do talk about it with, but not all of them. So they'll ask me questions and say things, but it's just different conversations. So these other women angel investors that I've created a network with, we talk about it all the time. It's great. So it's finding the people that you can. At work, there were other women at work that I could talk about it with, but yeah, I understand what you mean. Like it's sort of, I don't share salaries. I don't talk about like what my net worth is, but talking in generalities of, yes, I really want to buy my first house or apartment, or I really want to, I'm going to open up an account with this brokerage firm and start putting some money into an exchange traded fund or the S&P 500, or I'm going to buy individual stocks. I'm super excited. I'm going to try and look at, the tech stocks, whatever it might be. It's not, talking in generalities is fine. You don't have to talk dollar amounts if you're not comfortable.
I do think, at least certainly as I got older, that my professional and social circles started to blend in.
Yeah.
One, because you just don't have that much time, right? Like I have two little kids, and between work and kids, you don't have a lot of time to just social. So I find a lot of social opportunities with different networking circles. So like women in tech, women in venture, women entrepreneurs that I meet, right? And for those situations, you do talk very freely about investing on money and all that. And this piece might surprise you, but like my best friends from business school, and this is business school, right? Like this should be all finance, but my core group of 6 friends, we actually never talk about work because that's just your friends, right? We talk about family, we talk about kids. And then within my business school network, I obviously have professional people that I talk to. And when you have set networks like that, you can just reach out to, like I can reach out to a stranger from my class, but because you are associated by the association, we can have that conversation. So I would say whether it's B33, right, or another angel group, start trying to build that network or that professional association, and then they will become your friends. And we have a women in BC group that we've been together since we were senior associates, and now we're all partners at different firms, and our kids get together and all that. So like you build different circles of friends if you want to have that event.
Wait, is she?
Yeah.
She was.
So since we're talking about diversification, I was wondering what your thoughts or intuition is on cryptocurrency and NFTs, because.
Oh, I do own a little bit of that.
There
Yeah.
you go.
I have a little bit, I did a little bit of Bitcoin and Ethereum and Litecoin like years ago, like when all the the Bitcoin bros were like, going to the moon. And I did it in Coinbase. And then I had a friend that worked at a company called Celsius, which was paying really high interest on your Bitcoin deposits. So my friend worked there, my neighbor. And so I put my Bitcoin there, and then they filed for bankruptcy, and I just got it back. So like, it's been like years. And it's not much. It's like, I just did a little bit I think it's
not much, is still,
it's still
you're
money.
right.
It's still- yeah, exactly. And then I do have, one of my angel investments was an NFT. I did a very little amount. It's a white label NFT company, and I did it because it was hot at the time. And this is why I'm not diving into AI. Because I felt like it's not a lot of money, but it's just, I'm waiting to see what everything happens and what kind of comes out in the wash. But I don't know. I think it's a lot of gambling. I think it's gambling, personally. What do you think?
So I probably read, this is like not recently, but 2-3 years ago when I was really hot. I probably read 250 articles on cryptocurrency, and I still don't understand.
Yeah, me too. And that's partly why I did it. I thought I would get to understand it. And the NFT company, I was like, this is a good way because I have in the past invested in certain things that I wanted to learn more about. And I've done that. The NFT one, I'm exactly the same way. I can't explain it. That's the problem. If you can't explain it to somebody else, that's an issue.
Yeah. That said, right, I think it's a okay strategy, when you're investing because it's all about, like, hopefully, right, like, first you're investing money that is not your day-to-day emergency funds, right? So you have that money to invest, and say out of that $100, using that $10 to invest in crazy things that you hear about. Like, that's a okay strategy. You hear about crypto, great. You hear about metaverse,
Yeah.
great, right? And then you hear about space technologies. Oh my gosh, it's the next year thing, but that's cool. Like, I'll invest in it, et cetera, et cetera. And when you even make a small investment, I feel like I'm more invested in it, right? So I read articles about it, I try to learn about it. So I actually use that as a catalyst to learn about new technologies for very minimal amounts. And I think that's okay. You don't have to understand something completely to do that.
I will say that back to your question really quick, another test that I have for myself is after I meet with a founder, can I explain it to somebody else, what their business is? And does the person get it? That's a test of like, do I understand it? Can I explain it? Because I need to be able to talk about every company I invest in really simply. And I coach people to talk about their businesses really simply. My business partner got me a mug because I say this so much. I'm an angel investor. Speak to me like I'm 5 years old. So it's that kind of concept. And
You'd be surprised at how hard it is, right?
it's so hard. It's so hard.
You think it's pretty easy after 30-minute conversation to explain what they do, but it doesn't happen.
Yeah.
So I'm super interested in investing in real estate, so it's great to hear that you did so too. But it requires a lot of capital to start, and so I was looking into REITs and like crowdfunding platforms like Fundrise and CrowdStreet. So I was wondering, just what are your thoughts on someone that wants to get into the business of real estate investing but doesn't have the capital, and how do you learn about it? Because I also feel like when I was trying to find courses, you have the Grant Cardones and all the like influencer folks that are not really trying to teach you. So how would you just navigate that?
So the real estate, I've invested in real estate in a couple ways. Residential, like owning my own places, and now I have a rental property. It's like a condo that I rent out. And so that's individual. I've done 2 deals where I invested alongside the like as a limited partner with the general partner, lost my shirt on both of those. And then I did Yield Street, which is like, it's a crowdfunding, for this other investment that I thought was gonna be great. Cause I think I know everything, cause I used to do this. And so I underwrote this deal and I'm like, this is gonna be great. And it's not. So, but I don't think those are a bad thing. And REITs are great. I love a REIT stock, like a good REIT stock, but understanding real estate is complicated because you have to understand consumer trends. What if you're investing in retail, you have to understand what the location that it's in, where's the demand coming from that people are going to shop in the stores of the properties that these people own. What are the stores what stores want to be there? Can they pay the rent? What are those businesses doing? Are they going to be okay? Like Foxtrot, obviously, like just crushed Chicago and other cities, like those kinds of things. Are they going to be around? Multifamily is a very safe, it's the safest, well, self-storage might be the safest. But the self-storage is great in good times. People buy a lot of stuff and they can't fit it in their house. So they put it in storage, and then it's great in bad times because people have to move and downsize and they put all their stuff in storage. So, and then multifamily, you get a lot of diversification. You have 100 units that are rented to all these different people. So it's very unlikely that 50 people are going to leave a 100-unit building all at once. So you have to think about all these things. I love industrial, but it's single tenant sometimes, or if you have a big portfolio, that's great. It's complicated. What's your job? What's your day job?
Right now I work in legal, but I'm doing a career switch in a commercial real estate.
Okay, there you go. So yeah, I mean, I would, if you want to get into it now, I would look at the crowdfunding platforms. I think they're good. And there's a lot of really reputable I call them borrowers because that's my old word, they're owners. There's a lot of reputable owners that use those platforms now. So I don't think it's all bad. And those people, before I did the Yield Street deal, I talked to the head of real estate there personally and wanted to understand his entire process. And I underwrote him as a person and his knowledge and his network before I would make an investment in something that he's recommending too. And that's because I did it for so long. And but great that you will learn so much more doing it in your day-to-day and feel much stronger about it. But I love real estate. That's a way to generational wealth, no question about it. If I had a ton of cash, I would love to own. There's I drive around buildings where I live and I'm like, I wish I owned that. I wish I owned that. So I get it. Yeah, it's great. But yeah, dive in. You're going to learn about it. And good luck in the job.
Thank you.
I have a couple more questions from the chat. They're both kind of location based, so I'm going to start with one and then follow up. One might be a simple answer, I don't know. They're asking if the Josephine Collective exists outside of Chicago, or do you know similar groups in the East Coast cities, e.g. Angie here is from Boston.
Okay.
I know you mentioned that Josephine Collective, New York.
Yeah.
Not happening, but
So they are based in Chicago. They do focus a lot on Chicago stuff. But I don't know if Massachusetts, if you could be a part of their group. Yes, there's tons of it. You can Google angel investing groups in my area, but some of the national ones are like Thai Angels. They're the largest in the world. They're global. They have chapters in every city, in every continent. They're great. I really like them. There's just so many. You can find anything for any kind of thing. Google it. You will find one. She's in Boston. I'm struggling because I'm trying to think of ones in Boston, and all I can think of is ones in New York. But so Google it.
Yeah. And then we have a decent amount of people online who are not in the United States. So we have a question that says, are there ways that you suggest investing in foreign markets? This person's from Mexico. Do you ever invest in foreign?
I haven't invested in Mexico. But there are angel groups all over the world. There are these opportunities all over the world. You could talk to even your economic development group in your town or city or whatever. They have education and resources on businesses. I think just look at what angel groups are in your area. That's what I would say.
Yeah, and I would say I would look at geography similar to how you look at a sector, for example, right?
Yeah.
Don't invest in something that you don't know.
Yeah.
And even on, this is not the angel side, but the venture side, if we were to do a outside the US deal, we understand that it's gonna be hard for us to proactively learn about it ahead of time. So it really depends on who the other investors are around the table, who you're investing alongside. That becomes more important, really, any situation where you don't feel like you know much, but you still want to make an investment. So if it's not the other investors, look at sort of the founding team, right? Like, do they have a right to win in that particular market? And do you feel like, I mean, still get your baseline understanding, but if it's sort of a foreign market you don't understand, a team that's also not from that market, no other investors you know that invest in that market, that's probably a pretty risky situation.
Yeah.
Well, we're close to time here. Are there any final burning questions?
What's your biggest red flag?
Do you have one off the top of your head so I can think?
Probably lying. It happens a lot.
Yeah.
And it's not like, you know, well, I don't want to minimize that at all. So I would have follow-up calls, right, with founders who, I'm like, oh, what was your revenue last year? There will be like 5 million, and we're on track to grow to 12 million this year. Like, great. So check in the year end, right? Like, did you hit that 12 million? We're at like 7, but we doubled. I'm like, oh wait, but I thought you were at 5. Oh, we're at 3 last year, right? Not knowing like we have notes and everything. So some of it might be outright line, some of it might be embellishment, but either one is not good.
Yeah, I'd say, yeah, lack of transparency. You feel like they're not answering the question. But this bugs me. It's not necessarily a red flag, but when you ask a question and the person doesn't answer it and they say what they think you want to hear and they won't answer it directly, I always ask again. I give them 2 chances. And if they don't answer it the second time, I say, I'm sorry, haven't answered the question. And then I try and frame it in a yes or no so that they can't run away. That's it. So it becomes a red flag.
Any final thoughts for our audience?
Thank you for having me. This has been super fun. This is obviously the Goldie initiative has a very, very, very special place in my heart. I was an OG and so yeah, excited to be here. Thank you so much for doing this too.
Yeah,
It's
yeah.
awesome to
Yeah,
hang out.
this has been really fun. I think it's great to see the turnout here and online and people interested in the space, right? That's always the first step in having interest. Because once you have interest and you lean in, a lot of great things can happen.
Yeah, just give it a go.
Thank you.
But again.
Yeah, bars open.
Great.
Food, or behind the behind that.